Welcome everyone to Charts Focus 1, where we teach you how to work hard and trade smart. All right, let's get right into it and talk about the markets. So SPY on the daily time frame. It is sitting at a very precarious area. Why do I say this? Well, number one, we closed below a significant area of support at $408. So why is this level significant? Well, you can see this level on the daily, the weekly, and even on the monthly time frame. And that's basically the entire bigger picture time frames. And so for the fact that on Friday, we moved well below 408 and continued to move lower, and then on the last hour of Friday, we had a little bit of a short covering, tells me that we're about to see a shift of momentum from buyers to sellers. However, there's also one more indication that we're seeing the momentum shift. My SMAs. So the 10 and the 21 SMAs. Now you guys should know this by now. These two is what I call the momentum pair. So if you're above the 10 and 21 SMAs, that usually means or indicates that the momentum is to the bullish side. And if the price is staying below the 10 and 21, that usually indicates that we are seeing a momentum that is very bearish. And so for the fact that we have actually closed below the 10 and now closed below the daily 21 SMA on Friday, this is indicating that we should be seeing a moderate bearish downtrend. Now, why a moderate downtrend? Well, first of all, we're still conforming to the parameters set by these two trend lines. So this descending level of resistance and this descending level of support. And we're still stuck right in the middle of these two trend lines. And so on Friday, we got our first sign and indication that we want to retest this descending level of support. And that could possibly mean that we can also see a retest of that huge, significant whole number level of $400. And that can also be where we can see a retest of this descending level of support when we see that convergence point of the horizontal level at 400 and this descending level of support trend line. Now, the two levels that I want you guys to have on your daily time frame is 400 and 403.50. This is the area of demand that we need to hold if we decide to continue to move to the downside this week and into the end of February, since we have that seasonality trend until the end of this month. And so if we decide to come back below 403.50, we should be able to see a retest of 400, especially if we can't hold 403.50 as a new level of support. Now, if we do come back down to retest this area of support or this level, I fully expect the 10 SMA to be curling down to the point where we are at a convergence point of the daily 21, or we're starting to see the daily 10 SMA crossing below the daily 21 SMA. And if you guys remember, that is called a bearish crossover of two SMAs, because when we usually have a smaller SMA crossing below a larger SMA, that indicates a short-term or long-term trend to the downside, depending on what the SMA is. So in this perspective and in this situation, we're looking at a potential short-term downtrend, especially if we do see the 10 SMA crossing below the 21 SMA in the next couple of days or even the next couple of weeks. All right, now if you look at the weekly time frame, things get a little bit confusing because on the weekly, this looks very, very constructive, a very constructive pullback. We're seeing lower highs and lower lows, and we're not seeing a huge immediate sell-off. But this is where that problem is with this constructive pullback, because constructive pullbacks can lead to such larger and volatile pullbacks to the downside. And so we need to be prepared for that. And that's the reason why we got short last week in case we start doing that this short week. And so if we do decide to retest 403.50 and we lose 403.50, if we can't hold it as new level support, I fully expect us to come back down to this weekly level of support at 400, which is again a very huge level and significant whole number level. I fully expect the 10 SMA on the weekly time frame to cross over the weekly 50 SMA, and that's the number one reason why I'm still long-term bullish. Right, we're staying above the weekly 50 SMA, which has been a huge area and caveat of this attempt of us trying to get over the 50 SMA and start a new uptrend for most of 2022. So for the fact that we have broken above the weekly 50 SMA and we're staying above it tells me that this consolidation is going to be worth it, as we're about to see the 10 SMA converge right at the 50 SMA and most likely will cross over the 50 SMA, a larger SMA, indicating a bullish SMA crossover. And ultimately, if we do see a retest of 400, I'm going to see the weekly 21 SMA probably around 392.50. So that is my prediction for my weekly 10 and 21 SMA. So ultimately, I am still very bullish in the long-term perspective, both in the weekly and on the monthly time frames. All right, with that in mind, let's take a look at our first name. So TXN. So first off, you might be wondering why we're short on this name. Well, before we get into that, let's take a look on the weekly time frame. So TXN has been a very strong name for all of 2022 and also into 2023. And the reason why I say that is that, well, we've been forming this huge macro base. And so after forming a nice double bottom within that huge macro base that we've been forming since the start of 2022, we've been staying within that huge level of resistance of 181 and staying above a huge level of support at 147. But now that we've had this nice bounce with this double bottom happening, I wouldn't expect us to see 147 anytime soon. And for the fact that we are now holding and kind of sticking around to this huge level of resistance at 181 tells me that in the near-term future, we can see a breakout over 181 and eventually retest the previous level of all-time highs. So around 193, right around here. And so, if we do decide to retest 193, there can be a possibility of us seeing a double top. But I don't want to get ahead of ourselves here, trying to predict what can happen, especially when we didn't have that breakout over 181 just yet. I'm just giving you guys kind of an insight into what could happen into the future. So basically, speculation. Now, the only reason why I'm telling you guys this is that, well, we have such a nice bullish outlook on the weekly and even on the monthly time frame. So why are we getting short on this name? Well, if you go back to the daily time frame, this is where the perspective has to change from a long-term perspective to a short-term perspective, because on the short-term perspective, we have a potential bearish opportunity. And if you guys remember, we entered with an early entry when we broke below 176 or around 176. And last Thursday and last Friday, we decided to reject both the 10 and 21 SMAs, and we weren't able to hold above either of them. And so with the fact that we're about to see another bearish cross of the 10 and the 21, there is a huge possibility of us breaking below 174 and ultimately retest the daily 50 SMA or this daily support level around 172. Okay, now the next major reason why I want to go short on this name, and the reason why we did go short last week, is that if we go into the smaller time frame of the 2-hour time frame, we're looking at a head and shoulders chart pattern. This is inherently bearish. And we have this ascending support trend line as our neckline for the head and shoulders chart pattern. We have the left shoulder here, the head right here, and then the right shoulder. And so if we're able to break underneath this ascending support trend line, which is around 174, that will be your confirmed entry point for a short to the downside. But if you guys want to get in a little bit earlier, if you guys didn't get in last week, I fully expect you guys to get in early around 174.50. And even on the 2 hour, we're about to see a cross of the 10 below the 21 SMA. And again, as a reminder, whenever we see a smaller SMA crossing below a larger SMA, that tends to be very, very bearish, indicating that the momentum is to the downside and favors sellers rather than buyers. Now, if you do retest the daily 50 SMA, okay, that could also be where you guys can potentially shape some of your position by taking some profits off the table. Why? Well, if we do decide to hold the daily 50 SMA, we can see a very, very nasty bounce that can either take us right back to our entry point around 174.50 or 174, or if you guys got in last week, around 176, and possibly even higher than that, and completely disrupting or even negating a potential break to the downside. All right, so make sure you guys are managing correctly once we are able to come back down to this daily 50 SMA, and then we retest it for at least a third time here. Now, if you're able to break below the 50 SMA and we retest 172, I fully expect us to not hold 172 as a new level of support, and we break below and retest this micro ascending triangle support trend line right over here. And that could happen around 170 or even 169. So around 170 to 169 is kind of where I'm looking for maximum profits. Now, make sure you guys aren't getting confused by my jargon here, my trading jargon. The reason why I'm calling this a micro ascending triangle chart pattern, even if it's on the daily time frame, is that, well, this ascending triangle chart pattern is within the weekly or even monthly macro base chart pattern, right? So make sure you guys don't get confused when I say macro or micro. So our second name here is EXTR. So EXTR, there are a couple of reasons why I really love this name for this week. So first off, we had an earnings gap down. So basically earnings is out of the way. I love that. Now, when we had this earnings gap down, on the day of the earnings day reaction, we basically recovered most of the losses that we had on that day. So more than 50% here, around 75% of the gains, the losses were regained and recouped. And then the next couple of weeks, we decided to regain all of the losses back from this move down on earnings day reaction plus the earnings gap down. And then after that, we decided to move sideways and we started to consolidate right underneath the horizontal level of resistance at 19.50 plus underneath this descending level of resistance trend line. So this checks off everything that I need to know about this name to be a very, very good potential breakout swing trade. And for the fact that we are staying above the 10 and the 21 SMAs tells me that the momentum is still to the upside, because if the price doesn't tell you enough here for the fact that we have recouped all the losses after earnings, the SMAs are giving you more confirmation, more indication that the bullish momentum is still here and it's planning to stay here for quite some time. Now, I love the fact that we are also seeing the 50 SMA getting coiled up with the 10 and 21. So short-term and the long-term SMAs are starting to coil with each other. And if you guys remember, we tend to get a very, very sharp move either to the upside or to the downside. But in this case, hopefully it's a move to the upside so that we can see the SMAs starting to uncoil with each other, right? Now, you guys can have an early entry over 19.50, or if you guys want to wait until we start to peak over the 19.50 horizontal level of resistance, or this descending level of resistance, you guys can wait until we retest $20 and then we start to use $20 as a new level of support. All right. Now, I really love the fact that we've been seeing this nice consolidation even before earnings, but on the weekly time frame, we have an even juicier chart pattern that you guys can see. So we have a bullish cup and handle chart pattern. Okay, so here is the macro cup, and then we have our weekly handle, right? This descending channel. It's not a flat handle, rather it's a descending channel handle here for the macro cup and handle chart pattern, which is inherently bullish. So with this weekly bullish trend coupled with the daily looking very, very bullish as well, I fully expect this one to have a very impulsive breakout to the upside this week or by the end of this month. All right, so make sure you guys have your alerts set up for this amazing looking name. Okay, so our third name here is INMD. So this one is also a very, very potentially good looking swing name. And the reason for that is, well, we have checked off earnings already. So earnings is over. And on earnings day, for the reaction, we had a very, very bullish reaction to the upside for 2 straight days, including the earnings day reaction. But we saw the last 2 days of last week on Thursday and Friday, we started to pull back. And between Thursday and Friday, we saw a nasty gap down. However, that gap down is giving us a new opportunity. We have come back down to a daily level of resistance at 37, and we're seeing the 10 SMA flattening out right at that 37 level of resistance. So if we're able to hold this area of $37 and the 10 SMA, you guys can get an early bounce entry at $37 or over it. And then if you guys don't want to get in at 37 because it's too early, or if you guys want to add to your entry points here, you guys can see a potential entry around 39. Now this should say 39 here, not 38. So let me quickly correct that here. There we go. All right. So if we're able to break over 39, which is another significant level of resistance on the daily time frame, we should be able to get a little bit more of a bullish confirmation once we're able to break over 39 and use it as new level support. But if you guys are one of those people who want that huge confirmation, that long-term confirmation to the long side, well then, look at the weekly time frame, because we have a huge level or area between $40 to $40.50. This is a huge level or area of resistance, and that's the reason why I gave you guys this long-term confirmation entry at $40.50. So we have rejected it 3 times now, right over here, okay, right over here, and now last week. Obviously, last week's candlestick looks very, very ugly and very bearish, but if we're able to hold again that $37 and ultimately head back up over 38.50 and ultimately over 39, we should be able to see another retest of 40 to 40.50, and then we can get that nice long-term confirmation entry over 40.50. All right, so our fourth name here is CLF. So this is another name that we're looking to short, and this one's looking even better than TXN. And the reason for that is that, well, we've already got a bearish crossover of the 10 and the 21. As you guys can see right here, we saw the 10 crossing below the 21, which is clearly indicating that the momentum has shifted from being bullish to bearish. And if you look at TXN, we haven't done that yet, but we're about to see the 10 converging on top of the 21 SMA, potentially giving us a crossover to the downside. And also, we have a head and shoulders on TXN, which is kind of leaning to the left, while we also have CLF with a head and shoulders chart pattern as well, leaning to the right. Obviously, the leaning to the left and to the right doesn't really matter. I'm just giving you guys this visual distinction between these two. But at the end of the day, we're looking at an inherently bearish chart pattern called a head and shoulders chart pattern, right? Here's the left shoulder, and then the head, and then the right shoulder, right? And a head and shoulders chart pattern. Now, for this one, it's going to be a little bit complicated. And the reason is that the perfect entry point was last week. So we could have either gotten in at the rejection of the daily 21 SMA. So once we start to move below it as an early entry point, or we could have gotten in once we started breaking below 20.50. So around 20.40 would have been a very, very good entry point. However, for the fact that we have closed well below both of the 10 and 21 SMAs on Friday, right at 19.82, gives us more confirmation to short this name in the short-term perspective. So if you guys want an early entry this week, look for an entry below 29.50, which is basically below the previous low of the day, which is Friday's candle here. And the low of Friday was 19.64. Or if you guys really want to see a longer term perspective downtrend, okay, you guys can wait until we break below 18.50. Why? Well, if we start to move rapidly down and we break below this descending level support neckline, right, this trend line right over here for this head and shoulders chart pattern, we can see the daily 50 SMA here starting to flatten out around 18.50. And if we decide to lose the daily 18.50 after retesting it, you guys can get a confirmed downtrend entry point below 18.50, and we can start filling in the gaps that we weren't able to fill. For example, this very, very tiny gap over here, and then ultimately fill in this gap that started or that formed in mid-December, and we have never filled this ever since we formed this gap up. So if we start that downtrend and if we break below this daily 50 SMA, okay, we will start to fill in these gaps right here, these two gaps, one very, very small one and one very large one. And last but not least, we have CC. So this one looks very, very similar to TXN. Why? Well, we have this micro ascending triangle chart pattern. And the reason why I say micro is that, well, just like with TXN, if you go on the weekly time frame or even on the monthly time frame, we have rather a very large and very nice macro-based chart pattern that spans at least 2 years here, just like TXN. And so with this macro base, okay, we have a very nice micro ascending triangle chart pattern on a daily. And this one is interesting because on the daily, we are not seeing any type of a bearish chart pattern forming, just like TXN with its head and shoulders chart pattern. Instead, we're starting to see a very nice bullish uptrend. But wait a second. You guys can clearly see that we are seeing the 10 SMA crossing below the 21. So if I remove the candlesticks here, we've already gotten a cross below the 21 by the 10, which is indicating a bearish momentum shift to the downside. But on Friday, we were able to close above the 10 and 21. And when this happens, this usually indicates that we're about to negate a potential downtrend that we're about to start. And for the fact that we have also gone past earnings and we have recouped most, if not all, the losses that we've gained from the earnings day reaction, tells me that there can be a huge potential for this name to have a nice negation of the downtrend and start a new momentum uptrend. And we can see the 10 SMA curling down and eventually curling up higher, obviously flattening out first and then curling up higher and supporting the price upwards. Now, the one thing that I want to see is a retest of 35.50 again, just like we saw last Thursday, and then breaking over it, which will be your early entry. But again, if you guys don't want to get in with an early entry, and if you guys want to wait for confirmation, remember, we have a huge macro base. You guys have to remember this on the weekly and even monthly time frames. And so the base resistance, this macro base resistance, is at 37.50. So if you guys want to wait until we are able to hold 35.50 as a new level support and we start to climb up higher until we retest 37.50, then you guys can look for an entry point there. And that can be our confirmation long-term entry point to the upside. And potentially, if you go back on the monthly here, a retest of new all-time highs, somewhere around 44 to around 47 and up. All right, that is it for this week. All right, make sure you guys are managing your risks correctly on this short week. And good luck tomorrow. And I'll see you guys all in the morning. Have a great rest of your night.